Hey everyone, welcome to the Hard Money Podcast. I'm Chris Casella here with Grant Smith. We run a private lending business called Sharper Capital Partners here in Cincinnati, Ohio, and this is our first ever episode. So Grant, good morning.
Morning, Chris. Good to be here.
Good to be here. I'm excited for this.
Yeah, me too. And, in this first episode, the reason we really decided to start this show and the podcast all together, one, we're relatively new to the hard money lending space. We overcame a lot of challenges from the beginning, just not having a lot of guidance, mentorship, or anything like that. And we really wanted to get involved in the community because of what the guys are doing over on the private lending podcast, Jason Balin, Chris Hatton. You just want to be another educational resource out there for people looking to get started in this business and anyone who wanted to see what it's like to start this thing from the ground up, because we're relatively new to the space. Wanted to get out there and make sure that people had a resource to see, what it's really like to get boots on the ground and get going here.
Yeah, big time. Jason and Chris have been super helpful for us. And if we can be even a little bit of that for somebody else, I think that'll be really helpful. Plus, I think being at a different point in our business, we provide a little bit of a different perspective as well. Just being a little bit newer, like you mentioned, they're pretty well experienced, like 10 or 13 or something like that years in. So I'm excited, like I said. And this content, just to kind of ground us, is for anybody who is investing in real estate, anybody who's a rehabber, fix and flipper, and any other hard money lenders or people who haven't even started in the space to begin with.
So, one of the first things that I think of when getting started in hard money lending is overcoming the nerves of doing your first deal, because there's something to be said about getting the logistics right. But when the money leaves your bank account, something else happens, and that is all psychological and emotional. And there's points to be had and things that are worth noting about that process.
Yeah, definitely. And so just to kind of ground everybody in where we're coming from. So Grant actually started this business back in 2020. So I'm going to go ahead and let him talk a little bit about what it was like actually getting started and how you got started in the private lending space, your first deal, et cetera.
Yeah. So just a little background about where I was at that point in my life. Graduated college in 2018. I went to a local college here. And that's actually where Chris and I met. So we've been running and trying to start small businesses ever since our freshman dorm room experience. But
Amazon fulfillment, the latter.
Oh yeah. A number of odd businesses, whether it's foot detox pads or hypodermic rollers for your face and the serums that go with them. So just a bunch of crazy stuff. Cat laser pointers that were too powerful and could have blinded your cat if it actually sold. So no, not new to the entrepreneurship space per se, but anyway, so after getting out of college, joined a family business, and that's where I currently work as I've been starting and running this business. And one of the challenges getting through school is I was a finance background, and I was always looking for opportunities to grow my wealth and continue to kind of build the legacy out. And I came across a local rehabber here through a mutual friend, and I knew really nothing about the space at the time, and I made some favorable terms in the deal, certainly, but I had a fix and flipper rehabber who was really willing to explain things to me and help me understand the space, and so that's where things really started to take off. And essentially what happened is when I did my first deal, I was going to have to pull money out of my taxable investment account. So I was going to have a tax liability should I pull that money out and cover this deal. And I didn't want to do that. So I ended up using a line of credit that I had against my portfolio. And all of a sudden it kind of had that almost epiphany where, okay, I actually, maybe I don't have to come out of pocket and take the tax liability. I can just earn an infinite rate of return so long as I underwrite well and I match short-term risk with, short-term security. So that's really the prerequisite for how this business got started.
Yeah. And so Did your mutual friend from college, did he approach you and say, hey, listen, I have this rehabber. I know that you have capital available. Why don't you two should meet? How did that dialogue go, and how did you actually end up connecting with your first borrower?
Yeah, so I'd kept in touch with this peer from college, this friend from college, and we'd regularly meet up just to talk about things and stay in touch. And I was actually doing 48 and 48, right? 48 miles in 48 hours. And I actually ran to the location where he was at to meet him at a Starbucks, drenched in sweat, and he's over there pitching me on, he's like, hey, I think I have a good fit for you in terms of an opportunity for you to profit. And he was a real estate agent at that time and still is, and he had been representing this investor in terms of, helping him purchase off-market deals and then put deals back on the market. And so it was really a good relationship he had there. And then knowing me as well, it was just, he was able to connect the dots and kind of keep the ball rolling for all of us.
Yeah. And that's really how it goes, right? I mean, at the end of the day, I feel like this is something that's mentioned a lot, but it really does come down to relationships. So obviously, like you mentioned at the beginning of the show, there are a lot of nerves when it comes to investing in your first deal. So we're going to talk about those in just a second, but why don't you talk about what your first deal actually looked like, putting it together, obviously having never done this before with no experience. Share a little bit about the first deal, then we can talk about what fears you faced before you actually dove in.
Yeah, I mean, the first thing that happens is, someone says, hey, I want you to, loan on my projects. And you go, okay, is this a person that I can trust? And because when you don't have experience, you go back to more of the things that you do, whether it's, basically you're assessing the character of this person, trying to make an intelligent decision as to whether or not you think this person will be responsible with your money. And even nowadays, that's still true for the business because we don't really want to loan money out to someone who we're going to have to chase down later because we're in the lending business, not the foreclosure business, or else we would buy underperforming notes instead of, we don't want to create them, right?
Yeah, we'd be at REO sales all day long.
Yeah, exactly. But so the situation really came down, and it was meeting with the borrower, the client, as we call them, and discussing, basically the structure of the loan documents. What were those going to look like? And again, I had no experience in that really. I had we have general counsel for the company that I work for. And so I reached out to him and he provided me with some documents that in all fairness, they got the job done, but they could have been done better. Just because he honestly didn't even understand what I was trying to use them for in the first place. So it was no shame on him, and it was more fault of my own. But we had a way to secure a loan. Or I had a way to secure my money against the property through a promissory note, then a mortgage, obviously, and all the documents to go with it. So the original note was for, I think, roughly $250,000 or $285,000, somewhere in that range. And we were at 70% loan to value. And the note had, again, very favorable client terms, but, I was learning. And that was the key there. Almost that ready, fire, aim approach, which we'll talk about in a little bit. But we went through the project, and, as we were going through the project, I opened my mouth way too early on and was like, oh, this is going really well. This is going, really smoothly for you guys. And, he was like, oh, knock on wood, and then that's when everything started getting interesting because the property came up with a number of funky issues, whether it was like, there was a drain on the property and it wasn't draining quite right. So they tried to do some exterior work, and then just a number of things happened that are probably too much detail for the extent of this podcast. But things went strange, but at the end of the day, we both came out of the deal, and I got paid what I was supposed to get paid, and they made a small profit as well. And I realized, done right, this could really be a great way to generate a lot of passive income. So that was really the first experience. And the part that I wish I'll go back and talk on for 1 second is, the moment that money leaves your bank account, you start reassessing everything. And I think that happens to everyone when they do their first deal. You start to think, okay, well, did I underwrite well? Meaning, did I loan against a property that really is strong? Do I have a good position against that property? And did I secure my note properly? Is it filed with the county recorder and all those things? And am I getting taken advantage of? And those are all things that you're trying to figure out early on. But now, you're we know what those things are, and so that's where it's exciting to talk about these things and make sure that people can effectively deploy their capital into real estate.
100%. I think there are a handful of lessons even in just that one story. I think one thing that stands out to me is the fact that, like you said, you do have general counsel at your family business that you're able to use as a resource, but just the fact that, a very skilled and very experienced general counsel in one business just has absolutely no idea how to do this private lending stuff. I think that's one thing that we've run into a lot is we're trying, we'll talk about this later on, but we're in the process of trying to find an attorney for our business as we grow. And it's a very niche business and not a ton of people know it. And I think that's really one of the reasons why we were so inspired to begin sharing our story and to become a resource for people, because we're doing all this work, aggregating all the information and kind of looking far and wide. Do we really want to make it more concentrated for other people? And the other big thing that stands out is you talked about the moment that the money leaves your bank account. And a lot of people can relate to that, but a lot of people can't relate to that because they're so afraid of exactly what happened to you happening to them. And that's like, you run into an issue with the drainage, you run into issues with the exterior, the deal kind of goes sideways. And then what do you do then? And I think the really simple answer here is that you'll never be able to avoid that stuff. And just like you did on your first deal, because you had the courage to actually pull the trigger, you just figured it out as you go. And, obviously we can put safety measures in place and make sure our documents are tight and that there's no holes in them and everything like that. But you're not gonna be able to do that your first deal. At least it's very unlikely. So you have to be able to pull the trigger, have the confidence to just do it and say, hey, I'm going to figure it out as I go. And then you'll get better as you go along.
Absolutely. And I mean, in most people's instances, they might, if they're deploying their own capital, trying to build their reputation out, you don't have to go out and issue a $250,000 loan. You can start with a second position loan on an asset that, has a way higher ARV and you have a lot of coverage in the loan to value and, maybe feel a little bit more secure, or just do a smaller loan in general. I mean, there's no reason you can't do a small first position loan that someone might need. I mean, we've done those before on, on some, like long-term rentals. So those notes are nothing to be ashamed of either. So there's a million ways to skin it. And
there are even partials. Like at our local RIA, we saw partials for $5,000, and you can take some money out of your IRA and invest in the deal. Just kind of get the experience, get the taste in your mouth, kind of get your feet wet. But anyways, so there's a lot to cover here, and we want to make sure that we're staying on track. So you mentioned that you want to make sure that there's somebody that you can trust, that borrower is somebody you can trust. And obviously that comes back to like just human intuition in relationships. That has nothing to do with hard money lending or knowing the specifics about the space. And the next point that we wanted to talk about is, how do you know if the deal is good? So maybe going back to your very first time, now that you're looking back in retrospect, how would you approach going to your first deal, maybe without all the specific knowledge that you have now, but trying to do your absolute best to make sure that the deal that you're getting into is good?
Yeah, we, again, from all the little businesses and ideas that we've had through the years, we actually spent a little bit of time at our local RIA, which was actually a really good experience, because I'll never forget the day we went in and they had a seminar on basically underwriting, trying to determine what the value of a property was. And you and I kind of looked at each other and we're just like, oh, this isn't that hard. Like, this isn't that crazy to figure out. I mean, it's pretty black and white. Like, so, whether you're going to your local RIA or there's plenty of books out there that I'm sure you could find on just identifying what fair market value of a property is. And then once you know what fair market value of a property is, you basically want to go, okay, what's 65% of that property's value? So if a property's worth $100,000, you want the rehabber to be in $65,000 into that property, or at least your exposure to be $65,000.
Is that the value? Sorry, yeah. Is that the value of the property at the time, or is that the value of the property after they have rehabbed it?
After they've
putting it on
rehabbed
the market?
it. Yeah.
So the ARV. So
Yeah.
a lot of people in the space are probably familiar with that, but for people who are getting started, just want to make sure that's clear.
Yeah, absolutely. And so once you kind of understand that principle, then it really just becomes, running the numbers and asking questions. And again, that's probably a little too specific for the extent of this podcast and just introducing ourselves. But it really just comes down to doing deals that you wish you'd found yourself. And that's really where our philosophy is at. It's, man, if I had this deal come across my plate and I was the guy that found the deal, I wish I was doing it myself, because I would make a lot of money. Because we're not out here to do loans that are going to put borrowers or clients in bad positions. And we're not going to deploy capital that's going to put our investors at risk. Again, like we said, we're not here to issue non-performing loans. If we wanted non-performing loans, we'd go out and we'd buy them. We wouldn't make them ourselves.
For sure.
So that's the extent of finding good deals.
Yeah. I think one of the big things to keep in mind as well when you're first starting out is the value of investing in places that you're familiar with. And I think that was one of the big benefits that you had, was you were investing locally. And even though you didn't know all of the specific details of the business, or maybe even all the nuances of the specific project that you were working on, you did know the market. And so you felt comfortable with your knowledge in that regard.
Yeah, absolutely. And my first deal, and really all the deals we do, are in places that I would be, I'd be comfortable living or even owning that property, and I think that also has a huge benefit to it as well, because you go, okay, well, I really believe in this property. I believe in this market. I know it's strong. I know what kind of demand there is for this area. And from that point of view, at the end of the day, if you're going to have a piece of property that you're loading on, if push came to shove, you'd want to own something in a good area. And we certainly do that.
Yeah, 100%. I think you really can't overstate the importance of intuition, right? I mean, yes, there is a lot more that goes into this: the underwriting, the analyzation, the relationships, everything. But at the end of the day, intuition does play a large role. So following that first deal, there's been a lot that's happened, right? So that was in 2020. And if you just kind of want to talk about what has happened since then and kind of walk us through how the business has grown, because it really has grown significantly since that very first one. And then maybe touch on where we plan on taking the business in the future.
Yeah. So it was in October of 2020 when I started working towards doing my first deal with the rehabber locally here. And it took us from October to December to work through all the doc prep and for him to actually find a deal. So in December of 2020, we closed on our first deal, and that was, $280,000 roughly. Then in 2021, like I said, that epiphany really kicked in that, hey, this is a great way to earn passive income. So we ended up originating a little under $1 million in 2021 and did about 10 deals there. And, and I'll even admit, at the time, it really wasn't, I didn't view it as a business per se. I always thought of it as just a way for me to earn additional income. And even into March of 2022, that's when you joined the company, and you can speak to this, but our original focus wasn't necessarily building this hard money lending business. I mean,
yeah, no, I mean, when you brought me on, it was, the conversation sounded more like, hey, this is becoming a really big book of business and there's a lot to manage here, and I don't have the time to do that. It was never, hey, let's bring you on and let's grow this thing and really kind of build something great. Obviously, just based on our personalities and who we are, that tends to have, like, that's kind of the direction that we just naturally head in. But yeah, to your point, it definitely was not yet this very structured, well laid out plan for the future.
And the crazy thing too is, think about all the businesses we intentionally started, right? I mean, like I said, We had a paracord bracelet product we tried to sell one time. We had, like I said, the cat laser pointers. We had the foot detox pads. We had the derma rollers. You had your apparel business. This is a business that came into by accident and is by far and away the most successful business I've ever started.
Without a doubt.
So it's kind of the funny part there. But so now coming into 2022, so far this year we've done 10 deals, or we've originated 10 loans for a dollar amount of roughly 2.1 million. And we have aspirations of getting closer to that 3.5 million mark by the end of the year. And that's certainly feasible considering the pace that we're going at and the availability we'll have here very shortly.
Yeah. And just for perspective for anybody who's listening and may not have looked at the date, this is July 13th of 2022. So far in 2022, about halfway through the year, we've originated the same number of deals that the business did in 2021 and more than doubled the dollar amount of our total book of business so far.
Good to note there. And then, as we go forward, we're looking to just grow sustainably. So if we can do 3.5 million this year, we'd like to do 5 million next year. Start deploying more investor capital. Again, just responsibly finding good deals that will work for our clients, but conform to specifically what our borrowing criteria is. Especially as markets kind of, I would say, find their footing through this period of time where interest rates are going up and it looks like demand is starting to slow a little bit, which for most of the rehabbers I talk to is an exciting thing. Hopefully they find more deals.
Right.
And ultimately in 2025, we want to be around 10 million in loans originated. And at this rate, I really only see it as a function of, two things, and that is deals and investor capital. So I'm confident we're going to be able to get there should we find those two things.
Yeah, definitely. And I think just an important note here as well is, yes, we're growing quickly. The business is growing quickly. I think that's more a function of just learning more about the business and becoming more comfortable deploying the capital itself. And we're not trying to grow too quickly to the point where we're overextending ourselves or we're taking on deals that are so-so or that may be good ones. We really want home run deals. We want home run borrowers, and we want to make sure that we set this thing up for the future, and that so that when we take on investment capital and we're growing our business to that $10 million mark in 2025, we make sure that the foundation is really solid.
Right. Yeah, and I think an important point to note about our business is we're not in a situation where we have to do a loan. I mean, if we have to sit back and wait for things for markets to work in our favor, we can certainly do those things because, we do have a financial base that is private capital. That's propping up some of the let's say the debt that we have in place that we're redeploying. So, we can play the waiting game and be patient when we need to.
For sure. So thinking about some of the hurdles, I know I alluded to this a little bit earlier when I talked about the legal aspect, but what are some of the hurdles that the business is facing going forward as we actually begin to move towards the goals that we set for next year and for 2025 and so on?
Yeah, the first one, and I'm actually excited because we got an email yesterday that we'll be able to follow up with a lawyer that we're excited to work with. It's actually someone from the Hard Money Bankers podcast, which if you're into this stuff and you're not watching their stuff, I mean, you really should get over there and check it out. But so legal counsel, legal support is going to be super important in making sure that our investors are secure, we're secure, the docs are prepped in the way that we need them to come transaction time, title insurance for lenders insurance, like making sure that that's been redlined and handled appropriately, and making sure that the trustee direct placement model is as clear and clean cut as it can be, because that's where we're looking to head instead of the fund structure.
And that's all stuff, again, there's so much to this business, and this is all stuff we plan to cover in the future, and we'll go into more detail on that stuff. But again, for the purposes of this, our first kind of introductory episode, we're just kind of covering where we are and where we want to go. But yeah, I totally agree.
Yeah. There's also the components of, as I've been around businesses long enough, and coming from a finance background, I understand how to handle basic accounting from like a QuickBooks type of perspective. But as it comes to handling other people's money, having a CPA who understands what exactly it is we're trying to do and how to handle that is something that we're looking toward as well. And then, as I mentioned earlier, the other two functions of the business are deals and capital. And truth to be told, right now we're earning more money inside and outside of this business, so we're able to grow our capital base, but not at the rate that we want in order to hit our long-term goals. So we're in the process of raising capital and finding people who are looking to deploy their capital against assets, not just against a company that might be upside down on its balance sheet.
Yeah,
but that's where we're at there.
Big time. And one of the big things that we're also working towards is getting more deal flow. And so that's, again, truth be told, that's another big part of this podcast, is wanting to get our name out there and to create some awareness about our business and to connect with other people in the space, whether that's investors, rehabbers, or other hard money lenders. And as Chris and Jason from the Hard Money Bankers podcast or the Private Lenders podcast always mention, no matter where you are in your business, nothing happens if you don't have good deals. Right. And that's arguably the most important piece, right? Because if you don't have deals, you don't have a business. So we're working on creating some more marketing funnels, whether that's Facebook ads, email marketing, even speaking. Like tonight, we're speaking at our local RIA and connecting with other hard money bankers. And so that's going to be another, I don't even know if that's necessarily a hurdle, but that's just something that we're really excited to be working towards as well.
Oh yeah, definitely. So just a quick recap on some of the things we talked about today. If you're getting started in this space, there's just a few things really just to focus on and think about. You just need to, first and foremost, if you want to lend money to people, you almost have to speak it into existence and say, hey, I'm a lender. They have to know. A lot of businesses die because of lack of awareness, not because the idea is even bad or because they can't come through on their promises, but they literally just don't let people know who they are.
Right.
And so if you're the only person that knows that's what you want to do, then you'll die with that secret.
Yeah. And I think a big piece of this, I didn't mean to interrupt you, but a big piece of this is that, imagine yourself back in the day before you did your first deal. You didn't consider yourself a lender, but the two guys who you were meeting at Starbucks did, right? Even though you hadn't ever lent on a deal, they saw you as a potential source of capital. And so in their mind, you're a lender. And I think that's really important for people who haven't started yet to really try to ingrain in their mind, is that even if you don't see yourself as a lender yet, you have to market yourself as one, because if you want to be one in the future, it has to start sometime, right? So I think that's a really important point.
Exactly. And so when you start letting people know that, hey, you are a lender, they'll start coming and talk to you and say, oh, I have this project. It just naturally happens. And you don't want to jump on your first deal because it's probably not a great deal, but you're making connections and you're getting your name out there, and people will find you, because that's the one thing they need to get the deal done, is they need the capital, because generally speaking, they have the deals.
Right. I always like to say, you might not, as long as you're making sure you don't lose your shirt on your first deal, you're not necessarily getting paid in profit, you're getting paid in experience.
Yeah. And I mean, Chris, we'll go back to it when I was first doing this, and I was really on the line about even doing my deal. And I gave you a call, and you're like, man, you're going to learn so much through this process. You have no idea where it'll take you. And, here we are 2 years later, a year and a half later, talking about it, talking about the journey. And, and Chris and I both talk about all the time is, making money is great. The journey's even better. So if you're thinking about getting started, there's never a better time to do it than right now.
Totally agree.
The other piece to this is, and something that I got right early on, is I worked with a borrower who had character, and that cannot be understated. Like I said, if you got to really have good intuition, have a good way of evaluating someone's character, and from that perspective, be able to make an intelligent decision as to if, there's someone who's going to stick it through when things get tough, or if there's someone who's going to bounce when, the first issue pops up on your property, because issues will always pop up. And if they're an experienced rehabber, they know that before they close. And the next piece there is, we did a lot of this stuff without knowing exactly what we were doing. And I have much more information now. I have a much clearer process in mind now. We have documented SOPs, all that good stuff. But in the beginning, you're moving first, and then you're learning, hopefully a little bit faster than you're moving. So, move first, learn faster.
Yeah.
And so with that in mind, don't wait to get started. Start right now. Go out, start marketing yourself. And then when the time comes, when you do start finding great deals coming through the door, well, that's when a whole other process of work begins in terms of getting the capital to actually close on those deals.
For sure. Yeah. I mean, it wasn't until just under a year and a half after you did your first deal that we actually sat down on a number of Zoom calls and just documented everything. Like, you just kind of walked through exactly the process that you went through with your borrower, and all the documents that needed to be in place, all the different folders that they lived in on Google Drive and everything like that. And obviously we've come a long way since then, but it wasn't until, like I said, just under a year and a half later that you were actually sitting down and putting the systems into place. So you were just at that point taking everything in, learning, becoming comfortable with the process.
Right. And it's amazing how quickly you can go from someone who, let's say, didn't know a lot about the whole, even just closing on a property, didn't know a whole lot about that. Well, now I go to, a REIA event, and it's like, well, at this point I've done 21. So how many people have flipped 21 houses or bought 21 properties? Like, probably not as many as you think. And so you have an opportunity to go out there and really help people learn a few things. And again, that's part of what we're trying to do here.
100%. And then the last piece is just kind of something that we already touched on, so we won't spend too much time on it, but it's just find great deals. At the end of the day, that's really what it comes to. Like, you hear this a lot in the space, especially just in the real estate investing space in general. The deal is made when you buy it, right? If you buy or you go into a bad deal that doesn't work and you try to force it, it's probably not going to work out. And I don't want that to discourage people from getting started, but especially as you begin your journey, and then as you gain more experience, you have to make sure you're getting good deals. But again, we won't spend too much time on that. That's really what we wanted to cover in this first episode. Is there anything that you wanted to add before we wrap up?
No, I obviously excited to be here, excited to get number one under the belt, just like getting the first deal under the belt and continue growing this business together.
100%. I'm realizing now as I'm thinking back to, I think I said analyzation, and I'm not even sure if that's a word.
Hey, we'll add it to the dictionary.
It's now part of our podcast.
Hey, Ben Franklin used to do that. A lot of words he just made up, and somehow they wound up.
It should be a word. So who do we have to talk to make it one?
Oh, yeah.
But anyways, we have so much more coming as well. I know we touched on a lot of stuff that if you're new to the space or you haven't even started yet, it might have sounded a little bit alien to you. We definitely plan on covering that stuff, going into more detail. So thank you guys so much for listening to the Hard Money Podcast. Stay tuned for upcoming episodes where we continue to share our experience and lessons as we build this private lending business. If you have any questions, comments, or if you want to connect, we'll go ahead and leave our email and our phone number down in the description. And if you're watching this on YouTube, then feel free to leave us a comment. Obviously, this is our first episode, so we'll definitely be able to get back to you, and we won't be overwhelmed with the people who are commenting. So thanks again, and we'll see you next time.